Hey guys, what's up? Shane here from Awake Effects. I want to welcome you to this trading video. I know it's a while since I posted one, guys, so I thought I'd create something here for you. Nice and easy, simple live trade on the EuroDollar, the 6E futures market. And I'm looking at a chart here at the minute. I am short. I'm in a little bit of drawdown at the moment, so it's good to show you a trade when you're in drawdown. Drawdown means the trade is actually moving against me. So I'm in negative at the moment. So let's have a look at this and let's see if this trade turns around and goes to the target that I expect it to go to. It is a silver bullet type trade. What is a silver bullet trade? Well, it's a trade that happens at a specific time of the day. So between 3 and 4 a.m. New York time, I like to hunt for trades. And the silver bullet itself is a trade where you know where the drawn liquidity is, and there's a fair value gap that allows you to get in that trade towards that liquidity. So if you haven't looked at my previous 2 silver bullet trading videos, check them out. If you're new to the channel, make sure to subscribe if you like and enjoy trading content, including live trading. So let's have a look at the charts and see this trade I'm in right now. So right guys, we are looking at the EuroDollar chart here. This is a 15-minute chart. These vertical lines here, this first vertical line here is 3 a.m. Okay, that's the 3 a.m. New York time denoted, which is the equivalent of 8 a.m. here in Ireland. And this other line here is the 5 a.m. New York, 10 a.m. Ireland. So this is the kind of the time period I like to be trading within or taking my entries. So the silver bullet trade is a trade where you enter knowing where the potential drawn liquidity is. So in my opinion, I believe this is going to go lower, and I'll explain to you why in a few moments. I believe the drawn liquidity are these lows over here. So I will mark that as sell side location, SS, sell side. So there's a lot of sell stop orders below the market here. It looks like she's going up here now, but why do I think it's going to end up down here? Well, looking at this here, we did have a structural break here on the 15-minute chart, market structure shift. So if we look from this low here, we had a high, higher low, higher high, higher low, all the way up here. High, low, high, 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 low, higher high, and then we broke structure. Then we had this big move down. What that's called is displacement. Now I did a video specifically about displacement as well, so check that one out too if you haven't done so already. So price displaced to move all the way down here. Price had a pull up, a move up then after the European Open here, and this is where I entered the trade. Now I expect price to continue lower. Now at the moment, it's in a little bit of a pullback here, but structurally, once we don't break this high up here, we're still technically in this downtrend. So I'll zoom in here a little bit more and just show you another aspect of the silver bullet trade. So what is a silver bullet trade? I'm going to delete this vertical line here. And if you look carefully here, you can see if you've studied fair value gaps, I have a video on that as well. I have a video on everything. So there's a fair value gap from this candle's low here to this candle's high. And if I drag that across here, you can see from this candle's low to this candle's high, there was this fair value gap. So we had a displaced move down, a strong move down. And that confirmed, obviously, that we're still in this downtrend. And the fair value gap was produced. And I entered just kind of inside this fair value gap. So we're short. Now, when you're taking your trade, you want to make sure you don't have a stop loss too close to the market because we can have retracements. That's completely normal. So I have a stop loss above the market here. And I'm targeting these lows down here below. So I'll just mark this up here as a fair value gap short. And it also marks the midpoint of that fair value gap. And isn't it interesting how this candle here moved up and tapped exactly the midpoint of that fair value gap there? Look, midpoint of fair value gap hit there. So I'll just remove that for the moment. So sometimes price wants to come back up and revisit this area here. Okay, so it's revisited up into this area here again, into the fair value gap, taking out this little high here. So anyone who was short here, who might have been trailing their stop losses, would be stopped out at the moment. So that's why you don't want to have your stop loss too close to where you entered the trade. You have to let the trade do its thing. So we're happy to hold this trade calm, peacefully and calmly, and let it do its thing and move down here towards these lows. Now, obviously the trade can fail. You don't need to win in every trade in order to be successful at trading. If you take 10 trades, okay, if you take 10 trades, for example, you have 5 winners, 5 losers. Yes, it's a 50% hit rate. But if you make 2 or on your winners and 1 or on your losers, you can be up 5 or after a series of 10 trades. So if or to you is worth $50, you could be up $250. If or to you is worth $1,000, you could be up $5,000 after the same 10 trades. So the amount of money you make is based upon the size of your account and how much you're risking on each individual trade. And you don't make your money from risking all your money into one trade. You make your money from a series of trades. So you have to expect losses and keep them small, and expect your winners and keep them large. And that's the secret to a positive equity curve. So you can see price rejecting here a wee bit. I'll jump to a 5-minute chart. Here we go. Gives you a little bit more clarity about what's happening in here. So we had the move down at 3 a.m. Price came back up. There's also, if you look carefully, that's a 15-minute fair value gap here, okay? There's also a 5-minute fair value gap here too. So there's like layers within layers inside the market. So let's say, for example, I delete this 15-minute fair value gap, and we're looking at a 5-minute chart right now. Let's have a look at this fair value gap here. That's a 5-minute fair value gap. You can see prices come back up to revisit that here on this 5-minute chart. If you see the way we've taken out this high, that's what I would call an internal liquidity sweep. Okay, a little trick that can be played quite often in the market that can stop you out if you're in a trade and price is down here and you're in profit and you're holding a trade and you move your stop loss above this high and then, I've been stopped out. So to avoid that, you need to have your stop up higher. Okay, so where am I in this trade? 1.9050 is here. Okay, I entered here. And my stop loss is 1.09130. So my stop loss is right here. So I'll just delete this 5-minute fair value gap. Okay, my stop loss is here above the market. So when I trade, I'm looking to get 2 or, so at least make twice what I risk on any one trade. And I want to be out before my sell side down here. Okay, so that's the final destination of this trade, in my opinion. So I'd like to be out of the trade before that level. Okay, I'm not going to be greedy and try and get out of the trade down here. I'm going to get out of the trade just before or once I get my 2 or, you know. So I'm looking to get out here, get my 2 or and be done. Okay, so we zoom in here a bit. Let's monitor the trade. Now, you guys like these kind of trades. This is what I would love to have seen 10 years ago when I started trading. But unfortunately, I don't think YouTube was even a big thing back then in the old days. Let me show you what a futures trading platform looks like. So here you go. You can see me. And then on my right, you can see the trading platform there. And then you can see the chart to the far right. Okay, so you can see my entry 1.09050. Okay, so I'm around break even right now. My stop loss is up here 1.09130. So in this trade, I'm risking 8 pips on the trade. Now, some people ask, oh, why trade futures instead of Forex? Many times with Forex, you can get stopped out because of spread, and broker platforms can be quite different from one another. Forex and MetaTrader 4 platforms are not as precise as regulated platforms like the Chicago Mercantile Exchange, which is where the 6E futures, the EuroDollar futures, is traded on. So I'm risking $500 on the trade. Okay, so R equals 500. Looking to make 2R. So looking to make down here about $1,000 on the trade. And you can see the exit there, 5 contracts, 1.088885, which is the bottom of this green line here. So now what I'm doing is I'm simply waiting for price to do its thing, as I say, and go to its final destination down here below. Now, what I wanted to say to you guys is, if you enjoy, watching live trades in real time like this, you may be interested in my live stream service, which I'm starting in January. So for more information on that, check out www.awakefx.com. I have a full online trading program and also a live stream service where you'll be able to see me trade like this in real time, Tuesday, Wednesday, and Thursday for the European Open and the US Open. Okay, so check that out. Any questions, you can always drop me an email. So let's see, can we get this trade to move where we want it to go to? This is a 5-minute chart. What I'm going to do now is just show you a 1-minute chart, and we'll analyze the trade on the 1 minute. So this is a 1-minute chart we're looking at right now. Okay, if you look at it carefully there, we can have a look at the structure that you can see here. Okay, so even on a micro level here, here's that purple line I drew earlier on with this internal liquidity sweep that happened. So we had a high on the left, price moved lower, has been going a little bit crazy here, topped out, broke this high and reversed. Has it reversed? How do we know if it's reversed? Well, we look at market structure. So if you haven't watched my market structure video, watch that one too. It's in the playlist, a beginner's ICT playlist I created. So we can see price from this swing low here. We had to move to this swing high. We had to pull back to swing low. We had to swing high. We had to swing low. We had to swing high. And then price came down here and broke. Let's swing low there. We made a lower high. Now we're making a lower low. Now we would expect a lower high here and a continuation of trend lower. Okay, that's what I'm looking for here. Okay, that's a 1-minute chart. So you can even see trends in 1-minute charts. The trends in 5-minute, 15-minute are stronger. The trends in 1-minute charts, they can have a little bit more fake outs. What do I mean by that? So for example, what could happen here is price could set this high, low, lower high, lower low. Sometimes price might just slightly break a high and then continue making lower highs and lower lows. Sometimes that can happen. So really you want to see what happens after the break and see if the trend remains intact. So my expectation here is that we will continue lower. Time of the day is it's 10:07 a.m. here in the UK and Ireland. So I would not be taking a trade now, but once I'm already in a trade, I'm happy to hold it until it either reaches its target or reaches the stop loss level. So let's monitor here, guys. Zoom in here. Now let's see what we can see that I've already taught you about on this YouTube channel. First of all, when we had this high, we had this move lower. We produced a fair value gap here. Let me just pull that across. So that's a fair value gap on the 1-minute chart. Okay, I know we've got a lot of pink going on here. A lot of pink. Let's darken it up a bit. Can you see that? That's clear. So price moved down, tapped into this fair value gap. Look at them candles there. Boing, boing, boing. And then price moves away. Breaks the low. So where are we at now? Can you see in here an imbalance? Can you see another fair value gap? There's one here between this candle's low and this candle's high here. That's also a fair value gap. Let's darken that up a bit. Boom. There you go. So from this candle's low to this candle's high. So even on the 1-minute chart, you have these little inefficiencies here. If price breaks a fair value gap, where is it most likely going to go? to the next fair value gap up. So we can see here, guys, look, this fair value gap, did price respect it? Yes, it did here in this candle. Yes, yes, yes. In this candle, no. Okay, so once we get that close above that fair value, we're going to go higher to the next inefficiency, which is this one here. So prices spiked up here. And let's see if this fair value gap holds price down. I'll just remove this line. So this is what I spoke about a few seconds ago, that sometimes on a 1 minute chart, like if this is a daily chart, it's different. Less probability of a downtrend having these little spikes like what's just happened here. But on a 1 minute trend, you have to expect that it's going to be a bit messy. You know, we might just spike above a high, take out a lot of buy stop orders, which gives us fuel for the move lower. There's obviously a lot less traders are trading this time frame compared to higher time frames. There's more money behind the higher time frame moves. So here we go, guys. Look at that. Look at the little rejection here of these little fair value gaps. This to me is beautiful. This is why I love trading. I love watching how the market is moving in real time. If you look carefully here, look how the bodies of these candles respected that 1 minute fair value gap from over here. And then the wickedest candle exactly touches the top of that fair value gap. This is not random. It is not random. It's very, very precise. You got price kind of moving lower. We filled in this fair value gap. We fill in this one. A lot of the price has been balanced in here. All the inefficiencies have been traded too. So now we're at a point where price is free to begin moving lower. We've got some confluence from the dollar index rising here. Dollar index moving higher. Giving me confidence that this is to move lower. Other little golden nuggets for you, my friends. I know it's a while since I posted a video, so I owe you guys. And I appreciate each and every one that subscribed to the channel already. Thanks very much. You are important people. Now, it looks a long way away, our target, doesn't it, when we're looking at the 1 minute chart? It looks like we've got a big drive ahead of us. We have to go driving all the way down here, all the way down, down. Boom. That's where I need to get to. That's the destination. The kids are on board. They're all in the camper van, ready to go on holidays down here towards Happy Town, which is your target. Yes, I am a little bit crazy, but you have to be a little bit crazy to trade and watch charts all day long for a living. So here we got price move up again, tap off that fair value gap. Very interesting, isn't it? Look at this. Like a ceiling. Aggressive move up. Everyone panics. It's going to go higher. And then boom, straight back down again. So it's like that's a ceiling. Very strong resistance. Look at all them candle body highs. Tuk, 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 all the way across. Now, next port of call. What do we want to happen next? We want price to break this low here. See that low? We want price to come down here, start breaking this low here, continue in this downtrend. So that will be significant. I'll just mark that level. That's the next draw on liquidity. What does draw on liquidity mean? It means the next place where price wants to pull towards or draw towards, the price magnet, is this swing low. So you can see now we've just pierced this draw on liquidity here that I mentioned previously. So we've just hit that. So let's remove this arrow, or we'll drag it down. Where is the next destination? Here we go. Price should want to visit this level here. Let's have a quick look at our trading platform. There we go. So we're in the green. We had a little bit of drawdown there, but we were cool and now we're in profit. And here's price moving down towards our next little zone here. Still looking at the 1 minute chart here. So tell you what we'll do. We'll have a look at the 5 minute chart just to compare. So now we're looking at the 5 minute chart, guys. Let's just remove this arrow. There we go. We're after hitting our next level. So we just let the trade run to target, really. So our next key level obviously is these lows over here. That's the next draw on liquidity. That's also a very good place to get out of the trade. Because sometimes what can happen here, guys, at these levels here is that, oh, it'll come exactly where you want it to go. And then it can start playing around. And then maybe keep you biting your nails for a while and then reach your target. So what would you like to do there? Take your profit or feel this emotion here for a while and then wait for your target? It's up to you. Can you hear my jazz music? Can you hear it? Can you hear the music? No, maybe you can. For some people, music playing in the background while they're trading can be relaxing. For others, it can be distracting. It's hard to get the right balance, but I found this cool kind of music on YouTube. Maybe I should leave a link below. Comment down below and I'll leave a link if you like it. How's our trading platform looking? Oh, we're up about $560. Let me get this pushed down. At this time of the year, winter in Ireland, guys, I get a cold head. I think it's time to put on my woolly hat. Woolly hat. Ah, there's my woolly hat, folks. Nice and comfy. Now, can we break this low here? Oh, come on. We are 6 pips away from our target. We want a little 6 pip run below these lows. To close the trade out here, we got 5 orders to close out at 1.08880. So let's have a look at the 1 minute chart here, actually. Wow, look at that run. All the way down. So let's see, can we get a run lower from here in this 1 minute chart? Let's monitor this here. So here we go. She looks like she's just breaking this level here now. Can we get her push? Come on. Get down there. Get down there, brother. Let me close this trade out. Okay, so we're breaking the lows. I think we can move our stop loss safely to break even right now. Can't let a winner like this turn into a loser, can you? So we're at break even. So we're just looking for our target next. Right, so it's 10:54 a.m. here in Ireland, which is 5:54 a.m. in New York. Price has kind of hit this previous target here, look. And we're having a little pullback, which is to be expected. With a move down like this, we could have a kind of a deeper retracement. But what I'm focused in on is a continuation of trend. And we look on a 15-minute chart here. We have more lows down here. Here's our sell side level down here. So we can see price has moved up, guys, into the 15-minute fair value gap here at 7 a.m. New York time. And filled that fair value gap. And now we're moving lower. So we're just looking to get out down here below. I'll show you that in a 1 minute chart. If you look closely, there was a 1 minute fair value gap all the way up here that wasn't touched. Price came up and just wanted to tap into that. Isn't that amazing? Fascinating stuff. Price rejects. Dollar index moving higher. Stay on the 5 minute chart here. Had my stop loss at break even, but as price was coming up here, I did move it back to this high. Reason for that is because it was 7 a.m. We can have a little bit of volatility here, which you can see right now. So I just wanted to let the 7 a.m., 7:15 a.m. play out here first. So I'll move my stop loss above this high now. 1.09085. 1.09085 is there. So our stop loss is now above these highs. And we're going to let the trade do its thing here. Let's see, can we get that target filled? Sometimes the more you're monitoring a trade, the more you're playing with it, you know. So if I just entered my trade, left my stop loss above the highs and just walked away from the screen, I could just come back and probably see this hit my target. But instead, I've been kind of monitoring the trade, moving my stop, readjusting my stop. So we're on the 5-minute chart here, guys. You can see price is after moving back up into a 15-minute fair value gap here, tapped into a 1-minute fair value gap if you want to check that out, and rejected here just after 7 a.m. New York time. So we're just looking for a continuation here. We've been in the trade a long time. We've been in this one for 4 hours now. Stop loss is now above this high, 1.09085, just above here. So here we are coming down towards target. I think I deserve a gold medal for patience in this trade. We've been in this trade for over 4 hours. So it has been a while. So I had the move down from the European Open, nearly got to our target, but we pulled back into the US Open, and now we're kind of continuing trend lower. So looking for the final push down here, guys. We're about 4 pips away, just 4 pips. So we'll let this run down into target. Be done for the day. We'll get this up on YouTube for you guys. I know it's been a while since I did a lesson for you. We're just touching this previous low here right now. I'm just looking for that final push through here, guys. You know you want to. Go on. Reward me for my patience. Market. 1 pip away.
Order filled.
Oh! Boom. Finally, order filled. So there we go, guys. We got our trade. And we exit there. You can see the profit here. $1,038 on the trade. Let's hit our target. Let's move that out of the way. And we'll just jump back to a 15-minute chart here to show you where we're at. So we entered a trade. We managed it. We got out down here. We got our 2R, just over 2R in the trade. Just over $1,000 now. Obviously, the sell side is here below, as I mentioned. We did have a nice move. We were very close to our target when we got to this point here. So the patience was holding the trade while we had this pullback into the US Open. And my stop loss, I had to pull it back to these highs here during this pullback. And then once we started moving lower again, we moved our stop down and we let it hit target. So there we are, guys. Delighted to share that one there with you. So speak soon, guys. Thanks very much for watching. Make sure to subscribe to the channel for more content like this. And thanks very much. Take care. Bye-bye.